Stocks jumping in some early trade after a better than expected jobs number this morning, even with the revisions. Our Jan Hatzius joins us this morning, Goldman Sachs chief economist and head of global investment research here at Post 9. Happy Jobs Friday once again, Jan.
Thank you, and great to be here.
You did get a little incrementally cautious before the print. Did that get borne out with the revisions, do you think?
Well, what we're forecasting is the front month number, so no. But if you look more broadly at the report, I think it was a little bit softer than what the front month number would suggest. Downward revisions and also a softer household survey, an increase in the unemployment rate on an unrounded basis, a big decline in the employment to population ratio. So I think there is, slowing underneath the surface, but it just wasn't very dramatic.
Are claims and unemployed quitters part of that picture as well?
Yeah, to some degree. I think you do have some, weakness in quits. You do have some updrift in claims. The seasonals make it a little bit hard to know how much of that is really driven by seasonal adjustment distortions. We've had that issue in the post-pandemic period. We've seen, some weakness in at least the ISM non-manufacturing activity. The employment numbers were better. So I do think that we are seeing some signs of deceleration. But again, it's not dramatic. And there's no sign that the economy is at least entering a recession right now.
What about Fed? So post-payroll, we did see market response. The market still expects 2 cuts this year, but the odds go from 100% to 70 or so and change percent. Does that make sense? I guess that's teeing off of what, the hotter wage numbers, better overall headline?
Yeah, directionally, it certainly makes sense. I still think that it probably will take quite a while, at least in my baseline, before they bring down rates. The next move, I think, very high probability is down. But I think for now, wait and see is probably the right expectation. In our baseline, we don't have cuts until the end of the year, until the December meeting. All the risks are to the lower side. So I think the market pricing in more than one cut certainly makes sense from a probability weighted
all the rest
perspective.
Except for inflation, which seems to be the big question mark about whether we'll get a real meaningful boost of inflation in the second part of the year because of tariffs and whether it's a one-time thing.
That's right. And I think we will get a significant increase in inflation. We have about 100 basis points of acceleration. But at the same time, I expect this to be a price level effect. And once we've gotten through the tariff-related price increases, I would expect sequential inflation to come back down pretty quickly. But that's what we'll find out a lot more
so the Fed can look through it, you're saying?
Yes, I think so. But I think you also want to have confidence that that's the right story. This is my expectation, and I think it's a reasonable expectation. But that doesn't mean there's certainty that that's what we'll ultimately see.
Meanwhile, Q2 tracker, where are you guys right now?
We're at 3.3%.
3.3.
So GDP is, badly distorted. It's very difficult to really make much of those numbers. The economy was much stronger in Q1 than the minus 0.2% number would suggest. And I think it's much weaker than a 3 handle in the second quarter would suggest.
Right. Do you anticipate making changes to your recession odds like you were doing in April? That was crazy, right?
Well, it was pretty crazy because you had all these massive changes in tariff policy. So we briefly went to a recession baseline, but then moved back to a non-recession baseline after most of the reciprocal tariffs were paused. We've brought the recession probability down since then. We brought it down to 35% after the U.S.-China truce. I think the trend is probably down from here. But there are still some significant risks out there because the tariff uncertainty continues to be very significant. The data, on balance, are definitely reassuring, but we haven't seen meaningful trade deals, really only the UK. There is a risk of renewed escalation with China. We're not building that in as our baseline. Baseline is we stay at 30 percentage points, but there's a lot of uncertainty yet to be resolved.